Welcome back, all investors, traders, and students of the market. This is Jeff Killian for the VTC, Vector Traders Consortium, and today is now September 5th, 2020. This video is entitled Market Call Short Part 2. On September 1st, we posted the information for the close of August 31st, predicting a major market sell-off. A high probability market turning point was in play. And we're going to get right into the information, but before we do, I just want you to be aware of the current updates on the website here for all of you to see. We're going to get back to this after we get through with this presentation in about 5 minutes for some very special course information at a price we've never posted before. So let's get right into where we are now as compared to where we were price action wise, volume wise, divergence, follow-throughs on the major market here in the United States. Notice the trend line violation here on the most recent sessions, Friday's low here at this point, indicating the possibilities for future directional price movement continuing to the downside. The Dow equity was really the first market that had major volume come in. Futures came in a couple sessions later. So that was here. And now the last three closed out sessions, especially the last two, have significantly higher volume as compared to all the way back, even higher than these two here up until around this juncture when the market started to turn back around. So here we are in a situation where the prices were obviously trading up on inflated highs because of the lack of volume here. And then finally, now a pivot point high has been officially established with two down closes. The probe is in play. And what we want to look at here behind the prices, what's going on behind the prices, again, traders, is that the short-term money, according to the money flow index here, which was located here at the time of the last recording, moved up and is down again for an even stronger short-term negative divergence as compared to the lower price and the higher price. So clearly, a lot of room to go to the downside here, people. A lot of targets associated with these areas on the way back down. We'll get to that in a minute. So short-term money definitely out of the market. This is short-term institutional smart money players who can and do move prices from one level to another. And in this case, sell off. Here on the Chaikin money flow, I think that we talked about this last level that had not been seen up until, or from the past up until around 126, 2018, this peak right here. So historical high levels, indicator turns back around, trades through an internal floor, and moves down before the prices ever started to sell off in a much bigger way on increased volume. Let's just fly in one more price-based. Oh, and remember, people, the Chaikin money flow 21 period here is a longer-term smart money indicator that will find track and trade with the largest institutions, giving us those indications that we need. So here we have short and both long-term money perspectives, which I think, and from our end, every professional needs to have in order to make a much clearer and succinct decision. Stochastics and momentum index here clearly turn right back around and cross them above to below, and a lot of room to go to the downside. Getting through this and right into the S&P equities on the cash side, the action itself clearly shows once again that we have similar but not the same price behavior as what we just saw on the Dow. And there is the trend line violation, a little more advanced in this case. Why 500 stocks versus 30 on the Dow? Getting into the MFI here for a minute. Again, short-term money, similar but not the same representation. Short-term money back out after a negative divergence compared to prices trading up on inflated highs. And again, CMF here, very similar but not the same. Look at the last historical the last historical date that this level, at this point in time on, the date is actually, okay. right here. So that was 826, had not been seen since 10/19/2017. Excuse me. So historically, high level again, turns back around, trades through the floor before the prices follow through at this juncture. Now, getting into the market that we prefer to analyze and get closer to trading decisions, ESE mini futures. And why? Because this market is open nearly 24 hours, 7 days a week. Very, very short closing time and right back open at 6 p.m. Eastern Standard to begin the overnight session. So look at the price chart pattern uniformity as compared to the two other markets we just looked at. Much easier, much clearer, much higher probability in determining the price chart pattern uniformity levels on the downside that we can use as price profit targets. This is a shake and money flow here. Obviously very similar, but not the same configuration. Long-term money is out of the market. And here, looking at this, on the MFI side of it, the short-term money is out of the market too. So now we just went through three different markets. Quickly, yes, but covering some of the most important things that any aspiring professional, any serious student of the market could ever need to know, to be able to put into practice these techniques, to be able to determine what is the current state of the U.S. market every day. Where and when do I have any real business trading short stocks, going long stocks, trading short ETFs, going long ETFs, funds short or long at major market turning points? Okay. Where, after we get in and we go short, do we have any real business paying attention to where we might want to get out, right? At an existing price profit target to the downside that was established on the way up. Where might that be? Where might that be? In this case, here they are. AES intercontract month 920. This is where we were, somewhere around this juncture here before the prices. Yeah, this is 8:31 when the last video was recorded and posted on YouTube on the 1st. Dated ended 8:31. Prices trade up again. Major crash day here, and again, all the way down to an existing price profit target level in real time. That was at 336025 and closed just below 3427. So look at the two volume spikes here. That was not available, not readily seen, because the dry up was still in effect here on the equities side. These people are shapeshifters, people. They will do whatever they need to do in order to use various markets at different times in order to hide what there is they're doing. But the procedure that we follow here, and we never vary from this, is to go through the broad markets first, come up with an end goal, smart money, bias market trading call to determine what should we be doing for the real-time sessions. What should the people who are trading stocks, ETFs, be able to plan ahead of time for the next few trading days or the next few trading weeks, right? In order to maximize potential profit and minimize the risk associated with whatever trades they are taking. 25 years, a little more than 25 years in the business, trading almost every day. The accumulation of knowledge put into actionable trading intelligence is what this company is all about. So, as I promised, before we finish up here, let's take another look at the website. VTCtraders.com, Victor Tango Charlie Traders.com. Here under trading courses, we have the #1 expert market timing course where you can learn how to be able to determine when these market turning points are about to happen with a high degree of accuracy. This course is one of the most concise, one of the most well-organized courses that I think the world has ever seen. The information that's in here is something that is timeless in nature, something that will not cancel itself out, as in something that's good today but not good a year from now. The backtesting that was done behind all the indicators at various market conditions truly proved out to be something that worked 20 years ago, 10, 5, and obviously last week. The original price in real time, the live attendees paid $24.97. The course is now $14.97. And on this end here, we have a brand new flash sale outside of the reduced pricing here on our S&P 500 Immunity Trading course. $4.97 as compared to the original price of $28.97 some years ago. But again, this information, it will not cancel itself out. It may have a few years with a little rubber worn down the road because of the amount of people who have gone through this course. However, the information that is in this course is timeless. This is what I wanted you to know today. This is what I wanted to present. And again, obviously, we called the major market turning point ahead of time and are still monitoring that to the downside with advanced indicator formations, looking for a continued sell-off upcoming week. For more information, again, about how to do this, follow the links in the YouTube video. And we thank you for your business, and always look forward to serving you from now on into the future with your educational trading needs. Jeff Killian for the BTC. Everyone have a great weekend. We'll catch up next week.